What's going on YouTube? It's your boy Dollar Mike back at it again with another video. In today's video, of course, we're going to go over my portfolio for the month of March. As you guys know, I've been going over my Robinhood portfolio for some time now, a little bit over a year now, I believe, or it just might be a year. Actually, this March, March makes it 1 year. I've been going over my Robinhood portfolio so we can see the overall growth. Obviously, the market took a nice hit over the past week and a half, so we'll see those nice losses right there as well. But either way, this is a long-term game, so we're going up in the long term. This is not short-term. We're not worried about it in the short term. We're actually buying more. So make sure you check out my previous videos and you can find out what more I'm actually buying stuff on. But overall, we're buying more. And also, we're slimming down the portfolio a bit every single month, give or take. So it won't be some stocks on here that you might have seen in my last video that's not on here in this video. So we're slimming down the portfolio. I'm a little bit over diversified, I guess you could say. I don't want to have this many different stocks. I do want to slim my portfolio down, so that's what we've been doing, slimming the portfolio down. But either way, that's what we're going to be talking about in this video. So if you enjoy all that, sit back, relax. It's Sunday. I'm recording this Sunday. It's nice raining outside, stuff like that. So let's actually just get into the video. Let's start. Let's see what the portfolio is looking like. Let's go. Before we jump in, you guys already know, make sure you drop a like on this video. That pushes the video out to more people so more people can see this content and possibly help them as well when it comes to their first time investing or just investing in general. Make sure you subscribe because that's great, and if you enjoy any of this content or any of the other content on my channel, then subscribing would be perfectly fine, and I really appreciate it if you did that. And lastly, get yourself some free stocks and just general free stuff in the links down below. Webull will actually give you 2 free stocks right now. Public, Doe, M1 Finance, Acorns, they're all linked down below, so go check all that stuff out. But let's not waste any more time. Let's get right into my portfolio update for the month of March. We got my phone right here, got Robinhood right there, so let's open it up, Face ID, and we are in. So currently on the day, or let's actually start currently with my portfolio value, you can see I'm sitting at $23,147.36. That's a pretty big jump considering I was almost at $27,000, or yeah, I think a little bit over $27,000 about 2 weeks ago. But obviously, as we all know, the market took a nice hit, and it's a great time to buy if you're interested in buying any type of stocks that you plan on buying anyway. So over the past day, basically I'm up $44. That's probably from Dogecoin. Over the past week, you can see I'm down $1,500 roughly. The past month, I'm down about $1,800. The past 3 months, I'm still up about $1,700. In the past year, basically almost since I've started my account, overall up $6,700 or 41%. And we do it all the time. It's about the same thing, 41%. If we scroll down, I do have some options that I mentioned on the channel. The main one was Square. I actually bought my Square option, which I'm big down in right now. I'm down like what, $600? Yeah, over $600 right now. But I have full confidence that it'll go back up, and my expiration date is set pretty far out, so I'm not too worried about that at all, to be honest. I also have an option in Neos, which I got from a friend, so we're testing out the waters in that, see how things go. And I have an option in eBond, which is basically another play on Bitcoin. So they actually do a whole bunch of Bitcoin mining. So if this goes up, Bitcoin goes up, then this will go up as well. So we'll see how that plays out as well. But mainly my main option play right now is Square. And real quick, I'm actually thinking about doing an option on this ticker, SMH. They actually handle all of the computer chips and everything like that. So I'm thinking about doing a long-term option on SMH. Tell me what you guys think in the link down below, if I should do that or not, or if you're already in it, or if you're investing in SMH or anything like that. But they handle all the computer chips and stuff like that. I still have it on here, only $1 worth of it. But overall, I'm thinking about doing an option. It's on a big dip right now, so I'm thinking about doing an option on this. We'll see how much I get it for. I don't really have that much in my account to spare, so we'll see how much I get it for. But if you guys are interested in that, let me know down the link, in the comment section. Let me know what you guys think, if I should do that or not. But either way, let's jump into the portfolio. Let's start with the first stock, which in most cases is always Nintendo for me. So Nintendo is sitting at $77.12 right now. Overall, I have about 5 shares of Nintendo. Don't really plan on buying more at this point in time. I think Nintendo was kind of high right now. It's okay. I got in really early. I got in at $50. Overall up 52% with them. I already took a little bit of profit from them, and I always recommend that you guys take profit when you're up, especially this much. 52%, that's pretty good. And if I bought more, obviously I would be up more. But overall, they pay a solid dividend of 1.98, and I'll be buying more eventually, but for right now, I'm going to hold what I personally have. Past that, we got Microsoft, which I need to get more of. Every single week, I do plan on buying Microsoft. I'm trying to, and they got a dividend coming in for me on March 11th of 75 cents. So I'll take it, free 75 cents. That'll go back into Microsoft and earn me some more money. Overall, I have 1.68 shares of Microsoft. Overall, up 12% with them. Definitely going to be buying more Microsoft. I love Microsoft. It's just expensive, but you got to just get around that. Dollar cost average, get yourself in, buy the dip, like today or like last week or the week before that. Buy the dip, and you're all good. Past that, we got Sphd. As you guys know, this is high dividend, low volatility type of ETF. Either way, they're actually paying me a dividend, or they paid me a dividend on February 26th of 2021 of $1.57. So that'll get reinvested back into SPHD, which makes me even more money. I have about 11 shares of SPHD with an overall gain of 25% or $89. Overall, plan on buying more, buying the dip. That's simple. This is a long-term hold for me because this is just a dividend play. So the more dividends they pay out to me, the more money I get. It's that simple. It's going to get reinvested. And overall, it'll pay some of my bills one day. So not too worried about that. Past that, we got Psec, another dividend play. I have 114 shares of Psec, and it's sitting at $7.37 a share right now. I do not think you should actually buy this right now. I think this is actually a little bit overvalued. I could see it going to maybe like $11, but overall, it's pretty high. I've never seen it this high before, and honestly, since Psec's been around, if you actually do, they don't show you the max chart on Robinhood, but if you go look on Google, the max chart for Psec, it's been losing money for the past like 7, 8, 10 years, but actually when I bought Psec, I bought it around here, which is basically the low, $3.83, $4, and it's been going up ever since. As you can see, it's at $7 right now. I have about 114 shares, as I mentioned before, overall up 56%, which is very rare. I don't know too many people that have Psec and that's up this much with Psec. Got in around $4.71, and Robinhood was actually giving this stock away for free at one point in time. I don't think they're still doing it, but I bought at the bottom of the bottom. I didn't know it was the bottom of the bottom, but it's good stuff. So that basically means every time you put $100 in, you're going to get roughly $9.88 out every single year. And this stock actually pays a dividend every single month as well. But if you're already in Psec, good stuff there. I'm not buying any more. I'm just letting the dividends do what the dividends do, but that's it for Psec. I'm not buying any more Psec. Past that, we have AG&C, which is real estate for Maryland. As you guys know, I live in Maryland, and I kind of support that. So, I'm going to kind of get in on that, and they pay a nice dividend as well. But AG&C is currently sitting at $16.10 a share. I have about 12 shares, overall up about 5%. It could be a little bit more, but it is what it is. I just got AG&C not too long ago, and they pay a nice dividend of 9.73%. So good stuff there. It's a long-term hold. I'm not sure if they pay it every single month, but they do pay a nice dividend regardless. I think it is every single month because most of these real estate dividends or real estate stocks pay dividends every single month. So that's good stuff there on AG&C's part. Past that, we got Medical Properties Trust. I believe this is real estate in actually Alabama, but it's not any real estate in particular. Is this Alabama? I always go back and forth with this every time we make a video. Yeah, it's real estate in Alabama. It's under healthcare services because it's actually real estate for hospitals. So MPW, great stuff there, $21.58 a share. I think it's a decent time to buy it. Let me check the weekly. It's okay. I would just do the same thing. Dollar cost average. It really hasn't moved too much, but overall I had about 10 shares of them. Overall up 24% with those 10 shares, up $43, and they have a 5% dividend yield. Good stuff there, and this is a monthly dividend as well, like all the real estate stocks that you'll see on my portfolio. Past that, we got Realty Income, probably one of the best real estate stocks. This is the last real estate stock on here, I believe, at $60.50 right now. I have about 10 shares, overall up about 5%. And overall, their dividend yield is 4.65. Realty Income actually invests in commercial real estate, so like Home Depot, like Walgreens, stuff like that. They don't invest in any residential real estate, so like your home and stuff like that. They don't invest in any of that. So this is all commercial real estate, so it's not really going to go anywhere unless Home Depot, Walgreens, Lowe's, all these stores just magically close one day and then they would kind of, run out of money. But the odds of that happening, it's not going to happen. Okay, so next up. Next up is Boeing, and man, has Boeing had some problems lately. This stock is so annoying. It's okay because I bought Boeing at $99 at the bottom of the bottom when the market crashed back last year. So I'm not worried about it. I'm not buying any more Boeing shares, by the way, either. But it's just annoying to see, it's just bad news after bad news after bad news for Boeing. I have my 5 shares, overall up over 100% with that. I do not plan on selling Boeing until I see it get back to the old highs or around there, which is roughly, if it's not back in the 300s, I'm not selling this stock. So don't care. Just going to keep holding. We'll see what happens. Boeing is really kind of a one of a kind type of stock. It's not too many people that do what they do, so it's not going anywhere, basically. At least not. I'm not satisfied with my 100%. No, not at all. I want 300%, maybe more than that. So we'll see what happens with Boeing, but the bad news, it's just annoying to hear. Either way, I'm holding it. Past that, we got AT&T. Definitely a buy right now. One of the best dividend stocks that you can get for your portfolio, and this is a dividend investing video overall, but I do have stocks on here that don't pay me a dividend, but we'll get into those as well. But yes, AT&T pays a solid dividend. Overall, I'm down with AT&T because the market's been down, but that just means I'm doubling up on AT&T next week. I'm down about $13 or 3% on AT&T. Overall average cost of $29, and I have about 14 shares. I'm going to try to get this to 20 shares next week, so definitely, if you're not in on AT&T, just get on AT&T because they pay an amazing dividend. Their dividend yield is actually 7.46%, and AT&T isn't going anywhere at all. They got the 5G, they got a whole bunch of other stuff that they're just, naturally just own. So they're not going anywhere. They're like a Disney, but not as big as Disney, I guess you could say, or Verizon, but just not as big as Verizon. Either way, either way, AT&T is definitely a grab right now. I'm just putting that out there. It's a grab. But this is a grab for entertainment purposes only because I actually don't know anything I'm talking about. So, I'm just a guy just making YouTube videos. Next up, we have Coca-Cola. Love Coca-Cola. They have some great products. They're actually buying, I believe Coca-Cola is actually buying the rest or more parts of Body Armor. If you guys drink Body Armor, it's like it's not an energy drink. It's just more of a healthy drink. It's like a Gatorade, basically. It's like a Gatorade. So if you guys like Body Armor, they're buying more, I guess, ownership of it because they already have ownership of Body Armor, but I guess they're getting more ownership, whatever you want to say. And they already have some other drinks as well under their belt besides just Coke because I don't really drink Coke too much, even though I do like Coke as a soda. But overall, 10 shares. We'll be buying more for sure. It's Coca-Cola. Let's come on. It's Coca-Cola. Stop. 6% overall gain, and it's 3.35 dividend yield. Good stuff there. I have no issues with Coca-Cola. Let's move on to the next one. Next one is Ally Financial, one of my favorite banks, and one of the banks that I really recommend to you guys. They don't say that. I wish they paid me. Honestly, I'm gonna have to reach out to them because they should pay me. But yeah, Ally, I love Ally. I think they're a great, solid bank. They offer a whole bunch of different things that banks offer. Basically, they offer the investing stuff. They offer the banking stuff. They offer a nice savings accounts on their regular checking account and an actual savings account. Their yields on there, it's good. It's good stuff. And yeah, I feel like once they get into crypto, once there's like, yeah, we're buying Bitcoin, this price is gonna shoot up. I don't know if they're gonna buy Bitcoin. It'd be pretty cool if they did. I hope if it's gonna be a bank, I hope it's Ally because I really do like Ally. But yeah. If you guys didn't know, I sold all my Bank of America shares to buy Ally. I like Bank of America too overall. I think their fees are ridiculous, but I've been using Bank of America for like 10 years now, and they've been pretty solid to me. Either way, Ally, pretty solid stuff. I have about 8.9 shares, overall up 21%, and their dividend yield is 1.83%. I love Ally. I'll be buying more. Past that, we got JP Morgan Chase. Same thing kind of goes here. I have 2 Chase credit cards. Do plan on getting another Chase credit card, and I'll probably end up opening a business account with Chase. They've been treating me well. I have no issues with Chase. Their customer service is top tier, just like American Express is. I'm assuming. I don't have any American Express, but so I'm assuming their customer service is pretty comparable. But either way, Chase is killing it. I love Chase. I have 3.83 shares of Chase, overall up 9% with Chase, and I have 2.45 as the dividend yield for Chase right now. So good stuff there. I'll be buying more. Past that, we got Exxon Mobil, which also might be a nice buy right now. It's on a slight dip, nothing crazy, but I can grab some. And the best part about Exxon really is they pay a dividend that I don't understand how they pay it. Right now, I'm getting paid an Exxon dividend of $11 on March 10th. Don't know how they pay it because they're not really making that much money, but I'm not worried about it because they're paying me $11. That's pretty solid stuff for my 12 shares. Come on now, I can't really go wrong with that. Overall, I'm up $176 with them, or 34%. And that's a 6.4 dividend yield every single year. You can't compare that. I mean, you can, but I just like Exxon. I'm gonna use that one. It's a whole bunch of different gas stocks you can go. You can go get Marathon. You can go get Chevron, which are in rumors to actually buy Exxon. But I just have Exxon. You can get whichever one you want. You can get Shell. It's up to you. Do your research, find out which one you like, and go with which one you ever like. Next up, we have Emerson. You guys know Emerson. Well, you might not know Emerson, but they make a whole bunch of different just home things that you need for building and stuff like that. So it just makes a lot of sense to have a little bit of Emerson. I actually might sell Emerson because I'm not that deep into it, but they pay a nice dividend and they're kind of recession proof, which is also nice as well. So if you're looking for a stock that's not really going to move if the whole market tanks, then this is one of those stocks. And it's another one of those stocks that's not on this portfolio anymore, but it's actually in my M1 Finance portfolio. But I'll talk about that when I make an M1 Finance video. Either way, Emerson's paying me $2.20 on March 10th. I have 4.36 shares of Emerson, up 30% with them, and the dividend yield for Emerson is 2.33% every single year. Past that, we have one of the favorites, one of the top dogs, Disney. If you ever see Disney on a dip, like right now, even 1% dip, and it's kind of back up in after hours, but Disney's a buy. Disney's just a buy. They own too much. They have too much. The Disney parks, the Disney Plus streaming services, they just own too much. I've talked about Disney in 3 or 4 videos now. That's not my dividend investing videos. They don't pay a crazy dividend, but it doesn't matter. You'll get the gains on this stock. This stock will be $300 once they open those parks back up. It's no question. So Disney, just buy it. Just buy it. As entertainment purposes only. But just buy it. Like, to be completely honest, let's get it. 1.6 shares of Disney. I need to get more myself, but you can see I'm already up 56% with that 1.6 1.62 shares. That's insane. I do a monthly investment on Disney of $7 every single month, basically the same cost of Disney Plus. So every time I go and buy Disney Plus, I go and buy this as well. Either way, their dividend yield is pretty low at about 0.5% every single year. But like I said, you'll get the gains on it. You don't even need the dividend. I would like a bigger dividend, but you don't need it. It's okay. They might increase it once the parks open back up. We'll see what happens. Past that, we have Apple, also a banger. Doesn't really move too much, but it is what it is. It's Apple. I love Apple. I use all their products. I have no issue with it. It's not really nothing to explain with Apple. 7.2 shares on Apple, overall 5% with them. I expect Apple to hit maybe $250, $300 this year. Don't know when, but it'll happen. Overall, I buy $5 worth of Apple every single week, and they have a dividend yield of 0.67% every single year. Past that, we have Johnson & Johnson. I believe they just got approved for their vaccine shot, because I almost said it, and if you say that word on YouTube just doesn't like it. It doesn't like your videos if you say that word. So I'm not going to say the word, but yeah, 161 right now for Johnson & Johnson. I have a dividend coming in on March 9th, and they're paying me, or I have 2.52 shares. Overall, I'm up 5% with that roughly, and they have a 2.51 dividend yield every single year. But Johnson & Johnson, they just got approved for that one-shot vaccine, which is nice. So we'll see where the stock goes. Overall, Johnson & Johnson makes tons of different things: medical equipment, actual health care equipment, just natural lotions and stuff like that. So they're around forever, and they've been paying a dividend for basically forever, and it's always also been increasing basically forever. So it's nothing really wrong with this stock. It's a great one to have in your portfolio, no matter what you kind of got going on in your portfolio. This one and the next one, I believe, as well, which is Procter Gamble. But even one past that, I wasn't talking about that one in particular. But Procter Gamble is next. $123.55 a share right now. Overall, I have 2.31 shares with them. Basically not up anything. Like I said, Procter & Gamble doesn't move much like Johnson & Johnson does, or 3M, which I haven't gotten to yet. But they don't really move like that. Emerson, same thing kind of goes. They don't really move like that, but they're basically recession-proof. Either way, I'll up about $1 with them. 2.56 dividend yield. So this is where you put all your money in to get the dividends as well. You let it sit. It'll go up over the years, but overall, it's not really going to move like that too much. So it's not really anything to worry about, but you won't really lose too much money with this either if you're interested in that, because a lot of people, once they see a negative account, they might go and sell, which is exactly what you shouldn't do. Past that, we have Lowe's. Lowe's is great. You can get Home Depot as well. They're both as solid. I just like Lowe's just slightly more so, and I don't need both in my portfolio. Regardless, Lowe's, I have 1.26 shares of Lowe's. Overall, 24% with that. 1.44 dividend yield every single year. Lowe's is good stuff. Home Depot is good stuff. Get whichever one you want, whichever one you like more, or just don't get either one. It's personally up to you, obviously. Past that, we have 3M. Just mentioned it not too long ago. $175 a share. They don't really move that much, but they do pay a solid dividend, as they are a dividend king, and they've been paying that solid dividend for some time, and it's also been increasing over time, basically forever. So right now, I'm getting a $1.50 dividend from 3M on March 12th coming up, and I have about one share of the 3M, as well as a 13% increase or 13% gain overall, or $22. They have a dividend yield of 3.36% every single year. Great stuff. Can't complain at all. Beyond that, we have Cedar Fair, which is ticker symbol FUN. This basically covers all the amusement parks. I really wish I bought more, but I kind of feel like I missed the boat on this. I might keep holding it. I'm not entirely sure. You can see I have 1.27 shares of Cedar Fair, and I'm overall up 74% with them. $60, I might just go ahead and sell it, because I only have one share. They do pay a dividend. They're not paying it currently because the amusement parks aren't really open right now because of everything that's going on. But, I only have one share, and when they do start paying that dividend, it's not going to be huge, It's not going to make or break my portfolio, you see what I'm saying? So I could put that $60 somewhere else into something that could make me more money, or I could just add more to this. But I bought so low, I really don't want to add more to this, because I don't know. We'll see. Let me know what you think I should do in the comment section. You think I should keep it and add more to it, or just go ahead and sell it and put it towards something else? I got in at 28. It's sitting at 49, and I'm pretty sure it's only going to go up, especially once the amusement parks open back up. So we'll see what happens. Let me know in the comment section down below. Past that, we got one of my favorites, Roundhouse Sports Betting and iGaming ETF. This covers the entire sports betting and iGaming industry, essentially. So that means DraftKings, that means I can't even remember all of them on the top of my head, but I've talked about this enough on the channel. Ticker symbol BETZ. I bought it at roughly I bought it at roughly $15. You can see my average cost right now is about $20. I have about 15 shares. Overall up over 50% right now, and it's only going to go up. I'm pretty big in the sports betting industry. I don't actually sports bet myself, but I think it's a great industry. I think there's only growth in this industry. I don't see it stopping anytime soon. over the next 5 years, as sports betting becomes more legalized in more states, stuff like that, same thing kind of goes for marijuana, then these natural ETFs will just go up naturally. And I bought this at 15. You can see it's already at 31. Good stuff. Can't really complain. So, yeah, that's kind of it. They do pay a small dividend of 0.24%. I thought they would never pay a dividend, so it's surprising to see that, but I'm not really here for the dividend. I'm just here for the growth. Let's see. Next up, we have Southwest Airlines, one of my favorite airlines, but I don't really travel that much, or at least I haven't traveled that much to know all the other airlines. Southwest Airlines is actually the only airline I actually flew on, so I like them. You know, they're cool. But I know a lot of people like Delta as well. Let me know what airline you like down below in the comment section. What's your favorite airline? I know which ones I don't like, which is Spirit, United. Not a fan of United, just from things I hear online and then things I see online. Ooh, and I think those are the two I just don't really like right now, but it is what it is. Southwest, cool stuff there. I have about 2.3 shares of Southwest, overall up 58% with it. I got in really early at $36, and now it's at 58. So great stuff there. They barely pay a dividend, but honestly, I don't even expect them to pay a dividend, considering like they need all the money they can get. Every airline really needs all the money they can get, even though the government just keeps bailing them out. So really, they don't need anything because they're never gonna die. So I don't know. Either way, I got some Southwest. If you want to get some Southwest, you can do that, or get your favorite airline. I don't know. Up to you. Past that, I got Ford Motors. So you guys know, overall up with Ford Motors, about 10 shares of Ford, 33% as my gain basically. I do plan on buying more Ford actually. I like what they're doing with the Ford Bronco, and Ford as well as GM also announced that they're actually pushing for EVs. Finally, you know what I'm saying? It's only been like, you know, however long since Tesla's been out. So, you know, it's finally time to actually move to EVs and get out of this whole gas thing. I mean, I have nothing wrong with gas cars. I'm just saying, like, EVs are the future, and I just don't agree with you if you think they aren't. It's just that simple. I think we just got to get better with this renewable energy. Everything with energy is the future, so you got to get on it. We got to save the environment. You know, why not save the environment? You know, why not live longer? Just makes a lot of sense. Either way, I got some Ford. I'm up on it. They pay a slight dividend, 1.28%. So if you want to hop on some Ford, hop on some Ford. I don't have GM anymore, just letting you guys know. So yeah, it's not there anymore. Either way, past that, we have Walgreens. So Walgreens, as you guys know, Walgreens is one of my favorite stocks for this year in particular, but I'll probably keep holding Walgreens for some time because I actually really do like the company. For Walgreens, they're actually paying me a dividend on March 12th of $7. I have about 15 shares of Walgreens. They're on a slight dip right now, so that you already know I'm buying some more, just like I was buying that other stock, AT&T. Buying some more Walgreens, just like I'm buying some more AT&T. Big on both of these. 15 shares, overall up 17% or about $100. I buy Walgreens every single week for about $5, so I dollar cost average this. But on top of that, I'm probably going to buy even more, and they pay a dividend yield of 3.86% every single year. Past Walgreens, we got B&G Foods. This is another dividend play. Overall, this is $30.38 a share right now. I have about 35 shares. As you can see, I'm not really up too much with it, but their dividend yield is killer at 6.26%, and they pay this out, I believe, every single month. Nothing to complain about right here. I mean, I'm down a little bit right now, but I don't care. The dividend makes up for it. Not too worried about it. Overall, I'm up, but I'm down, as you can see on the today's return for it. So past Friday, basically. Don't really care. Like I said, the dividends make up for all this, so I'm not mad at it at all. Past that, we got Main Street Capital. They also pay a dividend, a solid dividend, and it's also every single month. I believe $36.68 is the share price right now. $10, or not $10, 10 shares about, or almost 11 shares. I got 10.5 shares basically. Overall up 15% with them, and they pay a dividend yield of 6.71%. Pretty consistent as well with Main Street Capital. Can't complain. Next up, we have ARC, Next Generation Internet. They don't pay a dividend, but ARC, as you guys know, Kathy Woods, I mean, it's really apt. It's great. It's great. Kathy Woods knows what she's doing. She knows what she's talking about. She's made some money. She's made a lot of people a lot of money. As far as herself, I mean, she's made tons of money. But she knows what she's doing with these ETFs, these ARC ETFs. Either way, $160 a share right now. It's actually a great time to go and buy this. They're down $20 right now in the week and only up about $2 on the month. So great time to buy some ARC, ARKW. Overall, I'm down with them. So you already know I'm buying some more next week. You already know I have 3.4 shares of them. They don't pay a dividend, or they basically don't pay a dividend. I'm not here for the dividend. I'm here for the gains. Check out ARC. Just check out their holdings in ARC. I'll probably put a picture on screen of what ARC holds, like the companies they actually hold in this ETF. They're going up. Everything's going up. The market's on a dip. Not worried about a temporary dip. We're worried about the long term for this stuff. Remember that. Past the blessing of ARK and Kathy Woods, we have Qyld, which is a Global X Funds, Global X NASDAQ 100 covered calls, basically. They basically just do covered calls. This stock really doesn't move like the price. It doesn't really move, but they pay an amazing dividend. I have a dividend coming in on, what is this, March 2nd for $3.31. Overall, I'm down with them, so I'll probably buy maybe like 5 more shares, something like that, maybe something slight. And their dividend yield is 11%. And they've been consistent with this. Don't follow dividend yields. Like, if you see a stock that has a huge dividend yield, that does not mean you go and buy the stock. There's a whole bunch of reasons why you shouldn't buy that particular stock. But this stock in particular, you should buy because they've been extremely consistent with their dividend yield. They've been extremely consistent with their income, and the dividend yield is 11%. What? You can't really go wrong with that. To be completely honest, you really can't. They've been paying this dividend for at least 6 years straight, I believe. So Qyld is a go-to. I'm just putting that out there. It's a go-to. And I really appreciate the subscriber that actually mentioned that to me about 2 months ago, maybe 3 months ago. But thank you very much for putting this on my radar because I had no idea. But they pay a solid dividend. And I'm in it. I'm in it. Let's get it. Past that, we got NEE, or Next Era Energy. This is just an energy play overall. Nothing too big here. Overall, I'm down with them because, the market. But 2.86 shares, I'd definitely be buying more. There's no question there. And they pay a solid dividend at 1.91%. There's not too many energy stocks that pay a decent dividend. So getting in Next Era Energy right now is actually a great time to get in, I personally think. So you want to hop in some Next Era Energy, or just hop in just energy stock in particular if you don't want to bother with an ETF, then I would test out or just do some research on Next Era Energy. I think they're pretty solid. Past that energy, we have Capital Southwest, which is not what you think it is. It's basically just financial services. So overall, I have 9.7 shares of Capital Southwest. They pay a dividend as well. This is overall a dividend play. I don't really care if the stock price goes up or goes down because I'm really here for the dividend. Overall, I'm up 1.5% with them. Nothing really there, but they pay a 7.49% dividend yield every single year. I'm here for the dividend, 100%. Good stuff there. On to Block, or Amplified Transformational Data Sharing ETF. This is basically your cryptocurrency ETF, not the official one, but it follows a whole bunch of cryptocurrency stocks like MicroStrategy, like Mara, like Riot, all that kind of good stuff that's made a lot of people a lot of money, including myself. Either way, I've made money off of this through an option, and now I have some shares. I have about 10 shares overall, down with those 10 shares right now. So you already know, what time it is. We're buying some more. Either way, down about $38 with them. They pay a slight dividend at 1.7% every single year. I don't expect them to pay any dividend, but I'm really glad that they do pay a dividend. So this is great. And it's also a great time to buy. So you know what I'm doing. I'm buying. Next up, we have Tesla. Just like the best stock in the world, basically, because so many people made so much money from Tesla. So many people lost so much money from Tesla from shorting the stock because they don't know what they're doing. They just think they think the stock is worth like $20. I don't know where people get this idea that Tesla's just a terrible company, that it's just not worth anything. I'm not ready to do the rant in this video. I've already done the rant in multiple other videos. Down with Tesla. Tesla is on a huge dip right now. This is the best time to buy Tesla. If it goes even lower than this, just grab it. Grab it. I don't know what else to tell you. Either way, Tesla, 4.25 shares of Tesla. Overall, I'm up 27% with Tesla, about $600. I got in super early. And this is honestly isn't that early. I didn't get in that early, to be completely honest. I buy Tesla every week, $10, no matter what the price is. But I'll be buying some more for sure, because this is huge. Tesla's hitting 1,000 this year. This is huge. This is a huge dip. And the next stock on the list, I believe, is also on a huge dip, and I believe I'm down with this one as well. So let's see. Is it? No, it's not. But this stock is also solid. Tesla. What is this? Basically Tesla for China. NEO. Basically Tesla for China. Only have about 3 shares. Definitely gonna be buying more. Anything under $50 is a steal. Anything under $60, I feel like it's still a steal. But if you can get it under 50, like it is right now, buy it. So that's what I'm going to be doing next week as well. Buying more of this. Good stuff there. No problem there. They don't pay a dividend just like Tesla doesn't. Don't expect that. Overall down 18% or $30. Don't care about that at all. This is long-term stuff, like I told you guys. Past that is the other one I was talking about, which I'm a little bit down in right now, but it does not matter because I know where this stock can go as long as Bitcoin goes up, and I 100% believe that Bitcoin will actually go over $100,000 this year. So this stock price, I talked about in another video, but I can just mention it here. I think this will be over $2,000 a share by the end of this year. Extremely bullish on this stock. They basically own the most Bitcoin out of any other company. They have a little bit over 90,000 Bitcoins. So whatever 90,000 is multiplied by the price of Bitcoin right now is how much they basically have. And that's just one thing. Overall, they're just a basically IT company. And I have 1.45 shares of them. Overall down about $30. And I put $10 every single week into MicroStrategy as well, no matter what the price is. But buy it. buy it. I'm telling you guys. I've seen people make a lot of money from this stuff. Like, next stock is Telos. They're actually also a cybersecurity type of company. This is more of a super long-term play for me. I don't even actually plan to have this on my portfolio. I'm actually in the process of moving stuff from Robinhood to Doe, because I think Doe is actually going to be my replacement. Not 100% yet, but we're working on it. But yeah, Telos, they don't pay a dividend. Overall, down about 10% or 11% with Telos. Have about 10 shares. I'm going to be buying more of this. Cybersecurity, it's the future. I mean, cybersecurity isn't going anywhere anytime soon. It's not really the future. It's really the now. It's just like you're just investing in the now, in the hopes, or really in the security that it'll just go up, which it will. Over time, I think this will be a $50, $60, $70 stock. Maybe 3, 4, 5 years from now. But I'm not in any rush. I don't need this to go up anytime soon. I don't need the money or anything like that. I'm probably going to stick with the 15 shares. I think I have 10 right now. I'll probably buy like 5 more and just hold it and just, go about my day. That'll be about it with this stock. Past that is the next stock. You guys probably already peeped it. Is APXT. This stock, you guys, I've mentioned on the channel so many times. This is probably one of my biggest positions that I'm really taking. No, it's not a gamble, because I definitely know everything about this company. I really do love this company. They're AvePoint. They're actually more than merging with AvePoint, a Microsoft cloud provider, and everything like that. I have 160 shares. I'm not selling this, I'm especially not selling it for a loss of $310. That's not happening. But 25. It needs to reach 25 at least before I sell any shares. So maybe really 20. No, 25. It needs to reach 25 at least before I sell any shares. So I'll be holding this for a while. Don't know how long I'll be holding it. Hopefully it's a couple months. They haven't merged yet. They're rumored to merge, I believe, or they should be merging by the end of March, early April. So shouldn't be too long. We'll see what happens with the price of the stock. Obviously, you'll be following me on the channel, so make sure you hit that subscribe button and you'll know all about APXT. But I'm a heavy believer in them. Past that, we got Churchill Capital. Bro, they straight lied. But it's okay. It's okay. They lied. Like, they lied big. Like, I mean, I only bought this because, I really kind of FOMO'd this for real, to be completely honest. So I really kind of just bought this. I was like, oh, it's going to go up. It's going to go up. Everybody's been talking about it. The Tesla killer, Lucid Motors, because they're merging with Lucid Motors, which is apparently the Tesla killer. It's not, but I bought 5 shares of this. Overall, I'm down $22 right now. I'm not too worried. Well, I'm not worried about that at all, actually. But the problem with Churchill Capital or Lucid Motors, they basically said that they were going to deliver 6,000 vehicles in 2021, this year. 6,000 vehicles were going to get delivered. But they just recently changed their outlook to only deliver a little bit over 500 vehicles this year. So I'm trying to figure out, how'd you go from 6,000 to 500 in a week? Because 2 weeks ago you were saying, oh, we're still doing 6,000. Then a week later, or a week after that, or a week ago, they're like, oh, we're only doing 500 now. What? So I'm not a big fan of what they're doing right now. Honestly, if I break even on this, which I'm pretty sure I will, because it's still a lot of hype behind this company and this stock, I'm pretty sure it'll go back to 35 easily. I'm selling it because I don't care. I'm not taking that. Like, I just don't like I don't like how they did that. Like, they built all this hype up. The car's in production now, I guess, but 500 deliveries from 6,000. I don't like that. I don't like how you did that and you didn't know, you didn't tell the public anything like that. So no, I'm gonna get out of that probably. But FOMO that, no big deal. Only lost what, $20. I don't care, and I didn't lose it yet anyway because it's a paper loss. So like I said, once it goes up to 35, I'm most likely just gonna sell it. I'll probably put a limited order on there and sell it right at $35, $36. But I'm not gonna be part of the hype. If it goes up to $200, $300 a share, oh well, I'll just miss out on it. I'm not a big fan of the company right now. They're gonna have to prove something to me for me to invest in it personally. So beyond that, past that, we got Fuse or Fusion. They're merging with MoneyLion, and overall I'm down with them as well. $30 right now, 40 shares of them. Good stuff. I mean, well, bad stuff because it's not good because I'm down. But overall, I'll probably just end up buying maybe like 10 more shares, something like that. Nothing really crazy. But Fuse, we'll see what happens. We just kind of got to wait this one out. It's a SPAC. We got to wait it out and see what happens. And I believe that is it, besides SMH, which I only have $1 of, so nothing there. And then the rest of these stocks here are, if you want to look them up, you can look them up. But the rest of these stocks are all free stocks from you guys. So thank you very much for that. And that's kind of it for the stock portfolio. Yes, that is it for the stock portfolio. So like I said, got all these stocks. I'm slowly slimming everything down. I'm doing pretty great. I personally think I'm doing pretty great as far as slimming everything down. The options, we'll see what happens with those. Only one I'm not really worried about any of them, because the only one I really lost a lot of money with is Square. But I have 100% confidence Square is going to go back up. And yeah, solid stuff. Like I said, I'm in the process of slimming the portfolio down. I actually just want to have only dividend stocks on my Robinhood account, and I want to move all the stocks that aren't dividends or that don't pay me dividends over to the Doe app. So in time, that's what's going to happen. I might try to transfer everything before my next portfolio update video, so that'd be pretty cool if I could do that. We'll see what happens. I'm going to have to get in contact with Doe so I can go ahead and transfer my stocks over. But yeah, $23,000. Who would have thought? It's been a year. It's been a year. I started my account off with like 2,000 or something like that. So yeah, crazy stuff. Wish we didn't take that huge dip, but as you can see right here, if we didn't take that dip, I was on the way to $27,000, like straight like that. I was getting there. So we probably still hit $30,000 maybe before the end of this year. I'm not end of this year. Before the end of March maybe. We'll see what happens. I don't know where the market's gonna go. Hopefully it's going up. We'll see what happens. But yeah, good stuff. Good stuff. And as far as the dividends go, I can actually take you guys on over to trackyourdividends.com. This is basically a great website where you can track your dividends. I made a video talking about it. I'll have it linked up there for you guys. But overall right now, with everything set up in my portfolio, I already plugged out all the numbers and everything like that. Overall right now, from basically all of my accounts, I'm getting roughly $528 every single year in annual income. So that's basically free money that gets reinvested back into those stocks that then in turn makes me even more money. That's the whole game with dividends. That's how it goes. That's how that's how you play the game. It's that simple. So yeah, use trackyourdividends.com. It's a free website. Everything's free on that website. They do have a paid version, and I have the paid version, but you do not need it at all to do anything that I'm doing personally on the website, which is just track your dividends. So all that kind of stuff, I would check their website out. There's other dividend trackers. You can check those out as well. If this one's not the best one for you, that's perfectly fine. I just found it myself. They don't pay me to say any of this. If you found another one, just let me out down in the comment section below, or let me know. I can do a review on it or anything like that. So personally up to you, but that's what we're at right now. $528 a year. Let's see if we can get this to like $1,200 a year, and that'll basically be $100 a month in free income, basically. So yeah, let's see what we can do. Let's see what we can do this year. That's kind of it for this portfolio update video. I would like to thank you guys for watching it. I think I did a pretty solid job this time. I feel like the last one was pretty like but yeah, big stuff coming for the channel as always. It's always a lot of good content coming for the channel. Let me know what other content you would like to see regarding stocks and stuff like that, or if you want to see any personal finance stuff, anything relating to money, I got you covered. Just link it down below, or just hit the comments down below. Let me know what you want to see. Yeah, I'm trying to think if that's it. I think that is it. I don't want to spoil a lot of stuff that I have coming, because I don't want to make any like false promises or stuff like that. So I'm just going to save it. But just know it's a lot to be excited about. I guess that's all I can really tell you. So yeah, that's kind of it for this video. I want to thank you guys for watching as always, and especially this far all the way to the end. Like, thank you so much. But that's kind of it. I'm out. Dollar Mike. Peace.